So I've made over $140,000 this year just in closed trading profits. And one of the biggest parts of my plan is trading liquidity. Now I've been trading liquidity for a long time. And over the years, I've slowly refined, and more importantly, adapted with the markets. Now, the last few weeks and months, I've been testing a very new, interesting way to take advantage of higher time frame liquidity levels. And here today on gold, I was able to catch a very nice 1.8 risk to reward trade, taking $1,000 here in about a 3-hour position, buying below very key liquidity levels. So in today's video, I want to share with you guys my new findings on this strategy and show you guys how I've been catching amazing risk rewards like this trade right here and this other trade right here. There was also a nice 1.5 risk reward that was taken live on stream for absolutely free. So if any of you guys are new here, welcome. My name is Aaron, also known as Aaron Trades. I've been trading for about 8 years and I mainly focus on just trading gold futures. Gold to me is one of the best markets to trade. I've been trading gold for that long that I know the absolute ins and outs, and that is how I've been able to take fantastic payouts this year just from Top Step. So what we're going to do is we're going to jump on the charts. I'm going to show you guys how I was able to catch this amazing 1.8 risk reward trade, and more importantly, teach you guys how I was able to do it so you guys can start taking the exact same position. So let's jump on the charts and we'll break it all down. All right, so this is the trade here. You guys can see here $1,085 on my XFA, where we took gold longs from 57.6, and I got out at 93.9 for a very nice 8 risk to reward. So I was risking about $144, and I took this out for a very nice 1,090 trade. Now, what's important here, guys, isn't just the 5-minute. Now, I'm using the 5-minute by understanding higher time frame bias. If any of you guys are new to trading, one of the worst things that you can do is jump on your charts, go straight to the 5-minute and try and pick direction. Because if I tried to look at direction on this 5-minute, I would actually be thinking sells. We're breaking to the downside. You know, I want to be following these markets, not fighting them. And I'd be looking to short here, but I would get stopped out. However, the way that I am now using my liquidity strategy is to understand a higher time frame bias, look for hourly or 30-minute lows, and actually taking 5-minute entries below them lows. If this at any point becomes too complex for you guys, don't worry. I have a completely free 4-hour long course below going through my entire liquidity plan. It's completely free. Check it out, study it. There's a lot of good points in there. Now, let's go on to my higher time frame bias right here on gold. And coming into the London session today, we were talking about price to come up and liquidate these two very nice levels. Now, why was I looking to even long price today? Well, you can see here, gold has been on an absolutely fantastic push higher. We had this huge push up, we pulled back, we had this leg higher, we're pulling back, and I'm looking for this to continue pushing higher on gold. And I actually think a lot of people got trapped out on shorting this day. Now, the reason I didn't short this day is, again, because we had perfect liquidity targets. We took buys up here in Discord for a very nice trade. Now, what's also important is the high time frame bias. Now, I'm not a swing trader. However, the daily time frame is very important, because I need to understand, where does my daily need to go? Do we want to tag the highs? Do we want to tag the lows? To me, that information is very important. How did the previous day close? Well, you can see here on gold, previous day, not only did we close bullish, what's more important here, we closed bullish after liquidating previous lows. So again, this is a great example where below these daily lows, this is where gold loves to tag lows before pushing up. Or if we're going to sell off, we love to tag highs before pushing down. So on this day, we could have actually been buying below these previous daily lows, looking for this breakout. However, I didn't trade too much this day, but coming onto this day, when I see price tagging lows and closing bullish, where do I want to trade today? I want to go long. Super simple. Why? Because my daily's closing bullish, and I want to be following these markets, not fighting them. Now, a good point here to understand is whenever you see gold in a range, this is what gold absolutely loves to do. You have a range like this, and if you're looking for the next big breakout trade, and let's say you have gold bouncing off the highs, bouncing off the lows, and you're right down in the middle, wait. Because the next big move on gold is coming. But before the next big move happens on gold, we break to the downside, we retest, most people jump in short, but guess what? That's where gold comes right back for the highs. And that's why people say, gold so manipulated? How do you trade gold? If you understand this manipulation, it can actually be very easy to trade. It's very repeatable. That's why I love gold so much. And this is exactly what we did many of times this week. And I've taken many of trades using this. For example, here is our range. What do? We come down, we tag the lows. Where do we come to next? The highs. So after you tag the lows, you buy up into the highs. Now, a trade that I took live on the Top Step New York Fast Market session in front of about 3,000 to 4,000 plus people was this exact same plan. We had our range like this. This is the highs of our range. This is the lows of the range. I was actually shorting down into the liquidity before buying back up into the highs. Now, a way that I have refined this plan, and the same thing here today, is here was our range in London. What do? We come down, we liquidate lows, and then where do we come to next? Right back for the highs. So understand that on gold, because it's very, very, very important. Now, I'm going to show you guys a few examples here. A way to refine the plan is once you have confidence with these liquidity levels, you know that gold loves to grab highs and lows before having the next big move. One thing that I'm starting to do a lot more is I'm starting to buy on the lower time frame below these liquidity lows, because the risk reward is absolutely fantastic, and I have very high confidence in my trading plan that gold is going to come up and liquidate these highs here. So this is where I was saying on the stream that I believe a lot of people will be trying to buy here, risking off this low. So once I see price coming down and tagging these lows here, this is exactly where I'm dropping down to my lower time frame and looking for reversal signs. Now, what's a reversal sign? A reversal sign could be a morning star pattern, could be a fake out, for example. That to me is a great reversal pattern. This is one of my favorite patterns on gold. And this is a morning star play right here. You can see this perfect 5-minute morning star. But remember, I'm not trading a 5-minute morning star. I'm trading a 5-minute morning star below an Asia liquidity low with upside liquidity targets. So when I drop down to my 5-minute, I'm not thinking, do I go short? Do I go long? I know exactly what I want to see before I even drop down to this 5-minute time frame. So as you guys can see here, we came down again. We liquidated previous 5-minute lows. We closed back bullish. So as soon as I saw this candle tagging lows and closing bullish, this is where I started to buy gold. You can see here, entry price 57.6, and I was risking off these lows. So I was risking about 43 ticks to make 300. And you can also see this was a 3.5 hour trade. I took this trade and went about my morning. Now, another key part of this trade is trendline liquidity. If you guys haven't already, like I say, check out the free course below. I go over my whole entire trendline liquidity plan as well. But this is another added confluence to see gold go higher. So the new addition to my liquidity plays, and I'm going to give you guys some more examples of live trades I've taken as well, is if I can understand gold loves to come up and grab highs or lows before having the real move. Again, yesterday I called these liquidity levels in Discord once price broke out. The same thing here again. If I can buy below previous hourly lows on the 5-minute, if we drop down here, this can give me fantastic risk to rewards, because I can be wrong very fast. If I buy below hourly lows, because I have a higher time frame bias, I have liquidity levels above, I can get very good risk rewards. Why? Because if the hourly just closes bearish below these lows, I can cut my trade straight away. Minimal loss. However, if we hold the previous lows and I have confidence that my highs are going to get grabbed, again, it can give me fantastic trades. Now, I'll give you guys an example of a trade that we took live on YouTube in the London session, because it was the exact same thing. And this trade was executed live. So my bias for the day was for price to come up and tag this double top, because I was thinking a lot of people would be selling here. Where do they risk off? Here. What does gold love to do? Loves to come up and tag highs before having that next move. Now, when I jump onto the charts and I see prices already pushed up, I go, okay, fine. Prices already had it pushed up, but we've also just rejected from nice level of resistance. So I want to buy up into the resistance, buy up into where most people are trying to sell. Now, what does gold love to do? It loves to come down and tag previous hourly highs or lows before having that move. Well, I'm looking for longs, therefore I'm looking for hourly lows to get grabbed to go long. So again, here's my hourly low. As this low is getting grabbed, what do? We drop down to the 5-minute, and this is where we start seeing these reversal signs. So the one previously was a morning star play. This is more of a fake out. What makes this a fake out? Well, you can see here, you broke below support and then instantly broke straight back above. So as soon as you break back above, cool. That's where I start taking my trades, risk off these lows here, and that's where we get that nice breakout and go. Now, I didn't hold it into these full targets, but I held it up into a very nice resistance level, which again ended up giving me a very nice, almost a 1.6 risk to reward. And the good thing about having the good trade location below these hourly lows is, like I say, if the hourly was just a close bearish below the previous hourly lows, I can cut my trade straight away. Minus 30, 40, 50 ticks as a worst case scenario. And you guys will see this all the time. Again, here, yesterday, it happened outside of my session. This happened in Asia. You could be buying below previous daily lows. Why? Because you have upside targets. Same as here in fast markets. I didn't take the longs, but I took the shorts down. But again, I could have actually been buying below the lows of the range. Why? Because I have targets right back at the highs. And again, this trade here would have also given me a fantastic risk to reward, buying on the closure back above, risking off the liquidity low. And where's my targets? Right back at the highs of the range. And these are trades that have happened just this week. And if you can catch good positions like this, man, you guys take 1, 2, max a week. And you guys are absolutely working your way towards fantastic payouts. So this is a way that I'm going to be adapting my liquidity concepts even more, is once I have my clear targets, I know where price wants to go, I've got my daily bias, and I'm looking for a liquidity grab for entry. As we're tagging previous hourly highs or lows, depending on which direction I'm looking for. As we're hitting hourly lows, I'm dropping down, I'm looking for reversal signs, and I'm taking that trade, anticipating the hourly is going to hold the lows. Now, one thing to note here, guys, I've been trading gold for 8 years, a very long time. I understand the absolute ins and outs of this market, but if maybe you're new to gold, don't try and refine too much. Like, you might not buy here, but let's say you maybe buy up here. Fantastic, that's still good. What you want to be looking for is rejections on the higher time frame. And one thing I actually like to do here is I can split screen my top step charts here, and I can set this chart on the left to just gold, and I can have it on a clean, naked hourly chart. So as I see this hourly candle tagging lows and starting to reject, I can look at my 5 minute, go, okay, cool, we got a nice morning star playing, we got a nice morning star shaping up. This is where I'm going to start to take my longs. Watch both charts. I'm able to look at the 5 minute without even needing to look at that hourly chart because I know exactly what I'm going to look for. But some of you guys, you might still be trying to figure out your sense of direction. But remember, use the 5 minute to execute based off your higher time frame bias. And if it helps having both open, fantastic, do that. Eventually, you'll get to a point in trading where you can trade the 5 minute, and it may sound a bit weird, but I can picture how the hourly candle's looking. I know when I'm buying from down here, the hourly is bearish. But as the 5 minute starts to break back above, that's where I'm picturing, cool. The hourly is now going to start to leave that nice wick rejection, which is exactly what I want to see. So 5 minute for execution, higher time frame for the bias. And look to buy and sell below these hourly liquidity lows when you have upside targets. So that's my trade for the day. You guys can see nice $1,085. You can also see here on my other XFA $652. I also took $5,500 actually out of silver yesterday doing this exact same thing. Now, if you guys want to check out the mentorship where we go into way more depth, I teach the entire plan, trade it live, do Asia live streams 3 times a week, trade reviews on Friday, then check out the mentorship below. If not, I'll see you guys in the next YouTube video. Trade safe. Follow this gold plan. I hope this helped, and I'll see you guys in the next one. Peace.
So many days